Property Perspectives Vodcast. I'm Ella Loneragan and I'm here with senior journalist Claire Tyrrell.
Hi everyone.
Claire, you've been covering property for a while now. Can you give us a bit of a background on yourself?
Yeah, so I've been at Business News since September 2021, so over 4 years now, and covering the property sector the whole time. And I've been a journalist since 2009 and covering many areas, and I have covered property in the past, but never in such an in-depth way as I do here at Business News.
Awesome. We know the industry is really broad and our readers take such an interest in it, so I try to pitch in and help where I can, and that's alongside my role of covering cultural industries. So today, Claire and I are going to take an in-depth look, breaking down the key trends, challenges, and the year ahead in property. So Claire, you wanted to start with a sector that's been thriving, and that's student accommodation. So what's happening in this space?
Yeah, it's probably not the most natural place to start because it's not its own asset class in its own right, but I think the story of student accommodation and how it's evolved in recent years does demonstrate trends in the property industry. So there was a recent report that I covered from the Property Council and Urbis, which shows that Perth is leading the nation in the volume of student beds that developers are looking to build. So you would have noticed the recent completion of the 30-storey tower in Wellington Street in the corner of Pierce Street. That was a Serona Urban project, and that's widely talked about. And that's one of them that has 736 beds that's just finished. And going back to the data, and we've got a little graph as well to illustrate this. So there are 3,265 beds in the development application stage. And what this means is that development applications have been lodged, so they haven't been approved. We've covered a lot of these things in the past, haven't we? And in terms of the number under construction in WA, so they've passed the development approval phase, they're under construction. There's 1,778 beds across 3 projects. So there's 2 in Waterford actually, and another one in Wellington Street. So the reason a lot of developers are going to Wellington Street is because of the new Edith Cowan campus, obviously, which is almost finished, and developers and students and just the population generally is very excited about this one.
Absolutely.
Yeah, and I actually attended a ceremony to mark the completion of Serona's tower finishing. And John Kerry, who's the Housing and Planning Minister, was there, and he spoke about the purpose-built student accommodation sector, so that's what it's referred to as, basically takes pressure off our housing market. We're in a housing crisis, that's not a secret, by adding new beds that students occupy, because at the moment a lot of these students, international students, etc., they're coming over, they're staying in the suburbs. They're not. There's not enough purpose-built student accommodation, but developers have really got on this bandwagon and they are building them. So we'll see a big change in Perth. We'll see many more of these towers in years to come. And Matt McNeely, who is the managing director of Serona Urban, also spoke about, he says we're 2 years ahead of the curve. He's not afraid of saying that because his is the first one to finish, major one to finish in Perth in recent years, so that's great. And what he did also that exemplifies trends in the market was point out the similarities between purpose-built student accommodation and the build-to-rent space. So you've probably heard this term mentioned, build-to-rent. So basically what it means is big apartment developers will develop a big tower and then it will be rented out by individual tenants, usually owned by an institution. So it's really a similar model, bit different, but a similar model in purpose-built student accommodation. And that brings me to another stakeholder in the process, who's the builder. So built this development, and they really like this kind of model. They like build-to-rent student accommodation because the traditional apartment market, it's build to sell is what it's called, and you're dealing with a multitude of clients and they've all got different needs. So can you imagine being a big builder, multiplex, etc., and having to deal with hundreds of different customers. They're usually very discerning as well, and they want different fittings and tiles, etc., as opposed to building one big building for one client and I think that's why they actually finished the job early.
No, it's great, and it's awesome to hear that we're a little bit ahead of the curve as well with student accommodation. So retail has been another standout sector this year. I recently read about the sale of a few shopping centres around Perth. So that includes Vic Park Woolies, which I think was a story you did, Claire, and that was for $30 million. So can you tell me a little bit more about these and other recent transactions in this sector?
Yeah, definitely. Moving on to a sector that's really been prominent this year. So we'll move on to industrial later on in the Vodcast, but that was the one that was a standout. But now more and more agents and industry insiders are starting to talk about the retail market as being the most popular. And there's many reasons for this, which I'll go into. But as you said, Vic Park Woolies, that's been one I've watched pretty closely. It was actually under contract or almost, Greenpool was raising capital to buy it, I think for about $35 million a while ago, but that deal broke down, didn't occur, and now we've had an Eastern States buyer, I believe, the name hasn't come out yet, come in and buy it off Vicinity. So Vicinity is actually offloading a few of its assets. I think that's normal, not sure their reasons. And there's many reasons that buyers are drawn to these properties. The redevelopment potential being one of them. There's a lot of surplus land around them, a lot of car parks, and they're usually in prime areas, so that will be one to watch for the future. Another recent one was North Perth Coles, that recently sold for $14 million. Coles has plans to convert it to a Coles Local, which is another story in itself. It's an interesting model. It's kind of a fancy, small version of Coles. And that too, the advertising material advertised the fact that it had a lot of surplus land around it that could be developed, and you can see new developments coming up around the area as well, including Celsius's Alma Square nearby. Other deals include Wembley Downs and Les Murdy IGA. They sold for $14 million and $5.1 million respectively. Small deals in themselves, but they paint a broader picture of what's going on. And in the retail feature that I did in Business News this year, I pointed out that there were some major retail transactions. So we've got a graphic here to illustrate that as well. Coburn Gateway and Belmont Forum. That was actually late last year. I remember covering this. It was the Christmas period. It was a bit chaotic, and this big deal came through, and so I raced to my laptop and wrote it. So Coburn Gateway and Belmont Forum sold for a combined $482 million. That was the biggest one. And then we've got Lakeside Joondalup Shopping Centre sold for $420 million. Claremont Quarter. So the story behind that was Hawaiian bought a half stake. They already owned half of it, but they bought the other half for $208 million, I believe, was the price. And the list goes on. Our viewers can see the graphic there. But yeah, as I said, market commentators say that retail is becoming the standout sector. This is reflected not only in the transactions but in the yields. So a simple explanation of yields, which is something in property that's spoken about a lot, is yields is income over value. So and income is your rental income. So there's an inverse relationship. The higher the value, the lower the yield, assuming the rental income is the same. It's a pretty blunt equation. But so data from CBRE shows that yields are sitting between 6 and 7% for retail properties. This is slightly down from 12 months ago, and the agency expects them to fall further as interest rates ease and more transactions occur. Another massive factor in retail is the lack of new supply coming to the market. So I'm sure you've heard about these big plans among many shopping centre operators to expand. Burragoon, one of them that's been extended. Galleria is starting to happen. It's been broken down into phases. There's plans for Coburn as well, $1 billion, I believe. And they haven't quite got underway yet. So, and this is in the midst of population growth, more people shopping, and so we need more. So it's a basic supply and demand equation there, and leading to retail assets being really popular.
Definitely. I know I've been waiting for Burragoon to get a bit of an update for quite a while.
Yep.
So the industrial market, as you mentioned before, it's hard to ignore. But has it lost its shine? Tell me what's happening in the industrial space.
Yeah, so as I slightly mentioned earlier, industrial has stood out for the past 4 years in Perth and globally. COVID has been a big driver of this, with an increasing need for warehouse space because of an increase in e-commerce and a fragility of supply chains, which happened during COVID. It's not so much anymore, but I think what it did was show the market what could potentially happen. So people are stockpiling more, and that's why one of the reasons why industrial properties are becoming more sought after. And West Australia also has a big push for local manufacturing. So industrial can be divided into logistics and manufacturing.
Got your made in WA.
Exactly. And that's pushed a rise in popularity of industrial spaces. And also when you think about WA, you think about big initiatives like we are eventually going to develop Westport, not sure when, but we will, and AUKUS as well with all these defence projects, that Henderson and Rockingham, etc. They're big industrial defence precincts. So it's a very, very popular space. Has it lost its shine? Not yet. But there's been questions raised about how much longer rents can grow. And we've got some data from Cushman and Wakefield showing that industrial rents have grown by 2% in the third quarter of this year. But if we look at the figures, we can see that growth has softened this year. But between 2022 and 2024, rents grew from about $100 a square metre to about $160 a square metre. So there's some pretty rapid growth there. And now they're sitting at about $170 a square metre. And when we look at yields in the industrial space, a couple of years ago, they dropped to around 5% in WA's industrial property. And this is pretty low, pretty tight yields, and what you'd historically see on the East Coast, so Sydney, where it's really tightly held, as they describe it. And now they're around 6.25%. And industrial vacancies, so it means the amount of available space in Perth, is about 2.5%. And so that can be broken down further. I think you see what happens in the industrial space is tenants tend to go towards those properties around the 5,000, 6,000 square metre mark. Anything bigger is hard to lease out, and we've seen that play out in the market recently. But I think industrials would still be a good sector to invest in.
Awesome. And I know you had a bit of a story to share about the kind of first time you heard about the industrial market really starting to boom, or it was about to. So can you kind of explain how the industrial market links with your time at Business News? Yeah,
so as I said, I started Business News September 2021, and when you start a new role, especially as a journalist, you want to hit the ground running, meet as many people as possible in the right industries. And I sat down with Realside Invest Chief Executive Julie Drago, who's one of the key players in the industrial property sector. They call her the Queen of Sheds. And she now is actually the president of the Property Council here in WA. And she just taught me through the market. She'd been in it for all her life. And at that time, industrial rents were less than $100 a square metre, so around $90, and had been that way for a long time. The market was in a bit of a slump. And she said, we're at a turning point. It has to go up. All the factors are leading towards that. And then what happened? It went gangbusters. So Julie was right.
She predicted it. So everyone needs a place to live, but there have been some challenges in the residential sector in recent years. So how's that tracking in Perth?
Yeah, so residential is a topic worth exploring in some depth, and a good starting point, I think, is population growth. So a lot of people, you can probably tell, we've been growing at a really fast rate. You look around, there's a lot more people. So WA has had the fastest rate of population growth out of any of the states, in recent years. So its population surpassed 3 million in December 2024, and it's around 3.1 million now. So in 2024, WA did have the fastest growing population at a rate of 2.4%, which is higher than any of the other states.
Yep.
And all this is happening in the midst of a skills shortage. So by 2019, we had hollowed out our skills. A lot of people had moved away because we didn't have as much work, and therefore we ran into issues when we wanted to stimulate our market and build more homes. So last year, the federal government set a target of building 1.2 million new homes across Australia by 2029. That initiative started last year, I think in the middle of last year. This equates to WA building roughly 25,000 new homes each year, which is quite a lot.
Yeah.
And going into that, I think we were around the 15,000, maybe 17,000 mark. So we weren't close. However, data from the Australian Bureau of Statistics shows that WA built 22,650 homes in 2024-25. And that's not bad. This was around 4,500 more than the previous financial year, and we've got a graphic that illustrates this as well. Even though it was about 3,000 homes below our target, we're actually closer than most other states to achieving our target. So, and increasing by the quarter. So when we look at the June 2025 quarter, because it takes a while for housing stats to wash out. I know the other data I referred to was a bit more current, but for the June 2025 quarter, 5,359 homes were built in WA, well below its target of 6,630. Not too far below as much as the other states, as you can see by the graphic. It is below, but it's not too far. Nationally, 40,524 homes were built in this target, and nationally the target is 62,735. I think you wrote that story, Ella, so thank you. And according to the Housing Industry Association, dwelling commencements in WA increased by 45% in 24-25 to 21,735. Forgive me for all the numbers, but I think it's important to encapsulate every house.
Yeah.
So this paints a picture that, when you look at commencements versus completions, you have to look at the whole picture in anything, and especially housing. So there was a situation a few years ago where home starts far outweighed completions. And when you look at graphs that illustrated this, it showed a big gap, and this gap represented skills shortages. So I don't know who dubbed this term, might have been Dale Alcock, but it was referred to as the snake that ate the wombat. So the snake needed to eat the wombat in order for the situation to normalise, and it's happened. The snake's eaten the wombat. So we're basically, when we look at the amount of commencements compared to the amount of completions, they're on par with housing. So it's good.
Great to hear.
It
also
is.
Because our construction costs have been so high as well, would you say? Yeah.
They've gone crazy. I think the rate of escalation in construction costs has steadied, but no one saw that coming.
And WA especially, out of all the states.
Yep. And when I spoke to HIA Executive Director in WA, Michael McGowan, he said that WA was in the best position nationally to meet the housing target. So what he told me was, we're best placed to deliver our share of the National Housing Accord, and that's what it's referred to, the 1.2 million homes. The federal government has to name everything, and that's what they call it, the National Housing Accord. Of 25,000 homes over the next 2 years, but we still need a lot to go right to make this happen. And he spoke about, greenfields housing can only deliver so much. To reach our share, we need to see more infill and high density projects commence, which is a challenge given they are navigating feasibility challenges, and I'll go into this a little bit later, and those situations are improving. He said, in short, we still need a lot more homes, but we're getting there.
So you've just mentioned a lot of different factors that are at play here, and it all sounds like it would lead to an increase in prices. So what are Perth's home values doing at the moment?
You would be correct. So It's pretty grim out there. So Cotality, which is formerly CoreLogic, and most people would probably know it still as CoreLogic, they provide the most reliable home value index, and we look at it every month, don't we, Ella? Mm-hmm. And the most recent one, which is actually October, showed that Perth's median value grew by 1.9% in that month to almost 900,000, so 884,471. And there's some recent data that came out recently, last week, I believe, that shows that our median's actually exceeded 900,000. And when you put this into context, it's a little bit crazy because, as I said, I started Business News September 2021. I remember writing my first CoreLogic Home Value Index story, and the median in Perth was about 555,000.
Wow.
So when you look at the growth, Perth's median house price has grown by more than 80% since COVID. This is not normal.
Huge.
And recent research from Cotality indicates that it takes the average person more than 10 years to save for a home in Perth.
Not looking good for me, is it?
However, initiatives like the low deposit home buyer scheme, which the federal government recently announced, Help to Buy is what they're calling it, as which allows you to buy a home as a first home buyer with a 5% deposit, may help. However, most people in the property industry are not supportive of this measure, as they say it will artificially inflate home values. There's an $850,000 cap for homes in Perth and a $600,000 cap for the regions. So I don't know. We might see a lot more homes at $850,000 in Perth. We'll see. Data from the Real Estate Institute of Western Australia shows that the volume of homes on the market is low. That's another indicator as well. So residential listings, which include houses, units or blocks of land, they're around 3,000 at the moment. This is nearly a record low. So the record was just below this, recorded in August. And when you look at established houses, it's even lower. I think I remember a 1,200-ish figure floating around at one point in time. And this is also, interestingly, it's well below the number of agents in Perth. So we've got more agents than we've got properties to sell in the residential sector at the moment, which is closer to 5,000. So I don't know what they're doing. Maybe they're pairing up or competing or doing something else temporarily. And data from REWA shows that the time it takes to sell a home is also near record low at an average of 9 days. And I don't know about you, but I know people that have sold their homes in far less.
Yeah, no, that is absolutely insane, 9 days. So we've talked a lot about homeowners and buying houses and how expensive that is. So what about renters and how's the rental market going?
Yeah, so data from REWA, who I mentioned before, they're the authority on this. So they show rental vacancies in Perth are at 2.2% the last time they were recorded, which was in October. But they're trending in the right direction. They were higher. Or lower, sorry. And at the end of 2022, they hit their lowest level in 4 decades at about 0.6%. So what we want to see in a normalised market is between 2.5% and 5%. So it needs to increase, but it's heading in the right direction at 2.2. And, you know, this time last year it was 1.9. So it's steadily getting there in Perth. There's some recent data as well from Cotality, which we also have a graphic to illustrate, which shows that Perth at the moment is actually the least affordable place to rent. And they work this out by calculating what percentage of a person's income is involved in paying rent. And at the moment in Perth, it's 32% of your income, which is above Sydney and Melbourne, which is at 30%. So I don't know about you, Ella, but that surprised me.
Yeah. That's crazy.
Yeah, and median rents in Perth are sitting at about $700 for a house, which is significantly more than it was before COVID. I always use COVID as the benchmark to measure against because I think it represents, you know, how the market's drastically changed. Recent data shows that rents in Perth have climbed by more than 90% since 2020. So in answer to your question, it's very difficult out there.
And we all know that Western Australians love living on the coast. I know I definitely appreciate living 20 minutes or less. And they love having their big backyards and their separate houses. So land developers have been very busy in recent years carving up land for housing. What's happening in the land development space?
It's a similar story, Ella. So there's high demand and diminishing supply. So, but developers are managing to get lots out there, which is great.
So we have a long coast.
we do. And we have MetroNet, which goes all the way to Antwerp now.
Yep.
So data from UDIA, which is the Urban Development Institute of Australia, shows that in the September quarter this year, Perth recorded the highest number of new lot sales ever in a single quarter since they've been recording it. And this was 3,683 lots. So when you look at quarter two, there were 2,431 lots sold. So that's a 51% growth in lot sales in the quarter. And this comes at a time when the availability of lots is diminishing. I think it's at an all-time low, actually. In terms of values, the average price of a lot is $377,535,000, which is up from $375,000 in the last quarter, so roughly 0.7% growth there. But year on year, lot values have increased by almost 10%. And this is all happening as lots get smaller. So on a square metre basis, it'll be a different story. So the average lot size is 387 square metres in Perth, and last quarter they were 362 square metres, so decreasing by the quarter. About 30 years ago, they were roughly 700 square metres. It was pretty common to get maybe an acre block in Perth, but not anymore.
No. And so we talked about spreading along the coast, but we can't really do that forever.
No.
So there's been a big push for density and infill in recent years. So what's the state of play in Perth's apartment market?
Yeah, so good news is there's momentum in the apartment market. Recent data from Urbis shows that sales are picking up as more and more projects are launched. It's not a question of demand. The demand is there. A lot of people want to live in an apartment, not everyone, but at this point people just need a home. And especially downsizers, right? They love apartments. So in recent years, apartment developers have been targeting this market who need to sell their big family home and go into something else, and they've usually got a lot of capital from selling a multi-million-dollar home. And they move into apartments on waterfront areas. I've had the privilege of seeing a lot of these apartments. They're very, very nice. Mm-hmm. I digress. So the data from Urbis that we also have a graph to represent shows that there were 356 apartment sales recorded in the September quarter. And this is basically the strongest result since the final quarter of 2021. And it's up from the second quarter of this year when there were just 195 apartment sales recorded. So, and when you drill down into those numbers, Finbar Group, which is an ASX-listed developer, is developing the majority of these. So they actually had 6 of the top 10 selling apartments in Urbis's Apartment Essentials data. So I think what this shows is people want apartments at the right price. I spoke before about downsizers. That's definitely a huge market, but there's also young professionals, and they're looking at that 1 to 2 bedroom apartment in the maybe 600 to 900,000 range, which sounds like a lot for an apartment. But as I said, these new products are high quality. And that's another dynamic that plays out in the apartment market is it's what HIA chief economist calls price elasticity. I knew the basic concept, but I'd never heard it so neatly surmised. So it's basically the gap between the price of an existing home compared to something that you're going to build. So in some areas and in some states, it's actually cheaper to build new than buy established. It definitely depends on the product and on the location. It's different according to those factors. But what Tim Reardon spoke about at the latest HIA Economic Outlook, which I attended, was that this gap's actually narrowing. And so for developers, they're finding it easier to get apartment developments off the ground as our median home value increases. Because, as you said before, build costs have gone up, so they're needing it. You need a pretty good return to justify building a big apartment building. A lot goes into it. And we also, when I did my apartment feature, we've got a map that will be up on screen as well, so which shows roughly what's being built. There's a few more that have come on since then. And when you look at what's coming to market, a lot of it's luxury, but some of that is changing. So, as I said, developers like Finbar are building a lot of apartments, and they're not cheap, but they're not crazy.
Yeah.
And when you look at what else is underway, so Cedar Woods, who's typically a land developer, but when I spoke to them, they told me that actually about half of their stock is apartments nationally, because they're a national developer. They're based in Perth. And that surprised me, because typically in Perth I knew them as a land developer. So, when you go up, you talk about coastal developments, Yanshep, they dominate. But they have moved into apartments. So they've got a Subiaco project. They're building 110 apartments there already, and they've just lodged a development application to build a further 230. What Cedar Woods has done also demonstrates what's happening in the apartment space broadly, is that they actually shelved this development in 2021 and brought it back to market. I think conditions were a bit too difficult back then. And Finbar, who I spoke about earlier, they actually have done that as well. So their Bel Air project, which is in Belmont, that's sold out ahead of completion, which is a really rare thing. I drove past it the other day. I think there's only 4 stories out of the ground and it's sold out. Wow. So they initially launched that project in 2017, but decided that the market was a little bit too soft. They put it on hold, and now they've relaunched it and obviously made the right decision, because it's sold out. And other projects that were kind of put forward many years ago and now are finally happening is Edge Visionary Living's Lumiere development in South Perth. That hit a number of planning hurdles, which we've written about comprehensively in Business News. But that's now going ahead, and with Edge's own building arm, which is another trend in the apartment space, is, as I mentioned earlier when I was talking about student accommodation, I said that a lot of builders don't like building apartments anymore. So what a lot of apartment developers have done is start their own building arm, and Edge is a key example of that. So they've got Edge Construction. And with their Lumiere development, they're adding 89 apartments to the market. And they're looking at bringing on a second project to South Perth, Harper-on-Swan, which will bring 71 apartments to South Perth. And South Perth is very popular at the moment.
Absolutely.
People probably notice Blackburn. Paul Blackburn has just launched another project there, Eclipse. Actually, it might be his first South Perth project. We'd have to check that. I don't know of him having anything else there. And Finbar has recently bought a block on Lyle Street where it plans to add more apartments on top of its Civic Heart project, which many people will be familiar with. You cannot miss it. 38 stories in the middle of South Perth. Mm-hmm. Controversial at the time. The planning minister at the time overrode the local authorities to get that approved. So it's a goldmine of stories, South Perth, actually. And another trend that's emerging in the apartment space, and we spoke before about prices going crazy, is that parents are buying for their children. So when I spoke to Cedar Woods, who I said was building out in Subiaco, Nathan Blackburn from Cedar Woods told me that a common buyer profile is parents buying for their children, because they have a view that by the time their children have saved the deposit, the prices will have run away. And he said we'd never really seen it to the extent that we're seeing it now. And when you talk about it taking 10 years to save for a deposit, then you can see why this is happening. And in terms of the forecast for apartments, David Cresp, who's a director at Urbis, he said, the fundamentals are aligning. We've got price growth, buyer demand, and a pipeline of projects ready to go. The next 12 months will be critical in converting this momentum into sustained recovery. By the year's end, work will have started on a further 2,000 apartments, with 1,500 of these to be completed in the 2025 financial year. I think a further 1,200 is expected to be built in 2026. So apartments are going pretty strong.
Yeah, it's definitely one to watch for sure. And another topic that you've written quite a lot on is our office market. Yeah. But it's in more recent years, it's seeming to have come off the boil a bit. That's a bit of an understatement, but some do say that we're at a turning point at the moment. So what's driving this?
They do. So, the office market globally has been pretty problematic since COVID, especially with the advent of working from home. It hasn't impacted Perth that much, and we have pretty high occupancy rates. We don't work from home, really. We're only every now and then we come in.
We're here.
Yeah, and when you get companies like BHP mandating office, it has a massive impact on Perth because it's so small, right? So basically the office market in Perth in terms of transactions has flatlined since 2022. There were quite a few transactions then, Allendale Square being one of those. There's a big one. I think that sold for $223 million to Centuria. And but more recently there's been a lot of listings, but not much has sold. I remember us covering the story about a office in Barrack Street, which sold for $5 million, and in the intro par, I think I said it was the first one to sell this year. And it wasn't that long ago, but there has been more since. So the $30 million sale of the Metronet building in Stirling Street in Perth. That was one of the biggest of the year. That was to the Public Transport Authority. That actually used to be the Sunday Times, and so that was a big one. There's a few others that we've written about in Business News, and last year the $75 million transaction of 66 St George's Terrace to Indonesian Oceania Capital was the biggest of the year. So we've still got time. Maybe we'll have another big one this year.
Yeah. Although not much.
Well, that was in December. That was one of those funny ones. It was just and a lot of times in property, agents try and
sneak it in,
get their deal in to the last month of the year. So we might see some more activity, hopefully. And as you did ask me before about a turning point. So
yes,
there's been a recent report from Colliers which points to the impending undersupply of office stock in Perth. So Colliers, which is a major agency, expects a supply shortfall of 59,800 square metres, very specific, within the next 5 years. So vacancy rates in Perth's office market at the moment are around 17%, which is quite high, not as high as it has been, but high. Colliers estimates that will fall to between 13 and 14% by 2029, which is about on par with the current national average. So we don't know, national rates might fall at the same time, and don't know where Perth fits into that picture, but we're definitely our own market, aren't we?
Yeah. Definitely unique. So we've just talked about some big transactions. What have been some of the recent major leasing deals in the city, and what's in the pipeline?
Yeah, so this year I covered a few major leasing deals, and it's probably too many to talk about now, but the bigger ones were Inpex to move from NX, which is 100 St George's Terrace, where South 32 is now, to 9 the Esplanade, and that was more than 11,000 square metres. So that was the Brookfield building that we're seeing that was just completed this year. Mm-hmm. And they've actually got signage on it, as well as EY. Multiplex moved in there as well. And I've just written about a recent one, NRW Holdings, which is a mining services company. They've just signed a deal to take up almost all of 219 St George's Terrace, so around almost 8,000 square metres. That was the second largest leasing transaction of the year. And Rolly Edgerton Warburton from Cushman and Wakefield, he's the managing director here in WA. He notes that we're at a turning point. That was his comment. Perth's office market is tightening at pace. This is me quoting Rolly, with vacancy rates set to fall and competition for prime space is intensifying. He said expect acceleration of rents in the coming year alongside a marked reduction in incentives. We'll see a shift towards landlord advantage in 2026. And what he meant by that is over the last 12 years it's been a tenants market with incentives pretty high, but we might start to see that change. I mean, it's as I said before, it's a supply and demand thing. And another thing he spoke about was the lack of contiguous space. So what this means is when a major tenant wants to move into a space. So at the moment, I believe Western Power is in the market for around 20,000 square metres. So that might be hard to come by. That's a space to watch. They're looking at a few big buildings in the city. So we should see something on that soon. I'll be watching it closely. But he said that these spaces are reducing, and so you're getting increased competition, and which will probably lead to increased rents. And, you know, obviously he's probably in a position where he's going to speak positively about the market, but what he's saying is definitely true. You know, we will probably see a shift towards landlord advantage. May not be next year, but the year after that or the year after that, unless we rapidly bring on more new supply.
Interesting. It sounds like there's going to be a lot of changes that will be soon to come. And thank you very much, Claire, for these valuable insights into the property industry. And thank you, viewers, for tuning into our Property Perspectives Vodcast. If you'd like to know more about the property sector, please subscribe to our website at businessnews.com.au. Thank you, Claire.
Thank you.